I don't think you're going to see huge changes in cap rates, although they do vary substantially across markets. I think you may still continue to see some downward pressure in the Vancouver market with lower cap rates, lower returns happening in that very hot market. In Ontario, I suspect that they will stay stable for the next little while unless we see some substantial change in the financial markets or in interest rates, vacancy, one of the other kind of key indicators that will make that change happen.
That's a healthy question. I would say cap rates will remain stable. Certainly in Toronto and Vancouver, I think cap rates could get less aggressive in Calgary and Edmonton. And I think cap rates will largely be stable in markets like Ottawa, Halifax, and Quebec City. So no cap rates getting more aggressive, but that could be a hopeful aspirational statement.
Well, unfortunately, I think that we do have the beginnings of an asset bubble that is tied to the very, very low interest rates. And leveraged buyers definitely have an advantage over unleveraged buyers because of the spreads to cap rates. So I expect to see cap rates continue to decrease. I don't see any let up in the flow of money into the real estate sector. And I don't see any evidence that interest rates are going to substantially move in the near term, and neither does the bond market. Obviously, the problems in the market are primarily in Calgary. And there we have both supply issues and demand issues and falling incomes. So in general, in the housing market, the strength of the market is tied both to incomes and to affordability issues. And so it works on both ends of the spectrum. We're seeing increased affordability issues, particularly in Vancouver, but we're seeing people's ability to support their rental payments and their mortgage payments challenged in Calgary. So those are the two markets that I think will be the outliers in Canada in the year ahead.
Well, if I had a crystal ball, I would say that in most of the major markets, cap rates are going to decline, particularly if you have assets that are well located, well built, well maintained. I think you'll continue to see downward pressure on cap rates. You know, certainly there will be micro markets within the major markets that'll have differing cap rates, but I think by and large, if you've got a great location, if it's well built, well managed, we'll be seeing continued downward pressure on cap rates.
I think cap rates are going to be stable. They're fairly low right now. I think you have more probability of cap rates going up in small markets, and I think our focus would be in the bigger cities where there's more liquidity and where cap rates will be more stable, such as Toronto, Montreal, Vancouver, and there's opportunity in Calgary obviously today. But smaller markets, I would worry about cap rates moving up on those markets.